Hello, everybody. Welcome to the webinar. I'll give everybody a few minutes to get settled, and then we can get started. Hello, everyone. I'll just wait a few seconds. This is also going to be live streamed on YouTube, so if you lose access, you can also check this broadcast out on Alan's house, Florida. We've got a hurricane here. Fortunately, I've been spared. I'm on the east coast of Florida. My concern is with my son, who's on the other coast. He's literally in the eye of the storm, but he's hanging out at his girlfriend's house, you know, and their family. And I don't know, he's got a tough life. Hopefully I don't need to be concerned about his house, Florida. We've got a hurricane here. Fortunately, I should say, caveat that if I do get disconnected, it's not for lack of manners. We have a lot of wind out there, and you know, I live on such a fragile grid. It goes out for much less than what we got outside. So hopefully we can get this done. All right, so why don't we get started? Welcome to the third and last day of the free trade live execution webinar series. My name is Mark Shawson, the pattern trader. I have been talking for the last couple of days on how I execute trades in the market just based on the price action and price patterns. I have a 4-step trading plan. It was specified in my book if you were able to download it yesterday. And you know, I look to be opportunistic. Wherever the market goes, I want to follow it. Now, this is a very crazy market, very sharp moving market, very volatile. You kind of have to know what you're doing, where your levels are, because you can be really caught out. Today, the Bank of England intervened. I'm not going to go into all of that. I don't think a lot of you want to hear about the gilt market, but it did have a lot of effect, and you know, really jostled the market. So I don't really care on the why something happened. To me, that's just to sound intelligent at a cocktail party conversation. I just look at the trailings in the market and try and follow what the market is telling me. So I dumped all of my shorts yesterday because I think I told you, even though I feel that the market's going to go a lot lower, we're trading at this 3,600 price level in the S&P. And this is where there's a lot of support. And whenever you come to these areas, you know, it took a few days, but, you know, we had an explosive move higher today. And I was sensing that was going to happen. So I actually got positioned long these Chinese stocks, all of them. I bought stock in Baba. I bought call options in Baidu. I bought call options in PDD, Pinduoduo. I also bought call options in Schlumberger. I bought the stock of Snowflake, and I bought the calls in the TLT, which are the 20-year Treasury bonds. So, you know, a lot of positions. Typically, I don't like to be in so many positions. I mean, I'm in 3 Chinese stocks. I'm not diversified, but I'm pretty excited about what I'm seeing there. So I just took a smack at, put a lot of money in those trades. And I'll explain to you why I did that in a moment. I dumped out of my gold trade. You know, I figured the S&P trading at 3,600. I had a massive amount of profits in gold, and just dumped out of there. And actually, gold had a nice move up today. So I was fortunate to get out with some nice profits. And I'm still short the New Zealand dollar, Canadian dollar. Despite the fact that it moved higher today, at some point I probably will add to my short positions because I think the overall pattern is still going lower. So this is a complex business. Hopefully you can appreciate that, it's challenging to explain all of the nuances of what I do and why I do it in just a short session. But basically I look at patterns and price action. Now, sometimes you get divergent patterns. Sometimes you get divergent price action. And so this is the S&P 500. And we were looking at, maybe I should go to the weekly chart. And yesterday, I kind of said we were at this major support level. I think I was pretty clear. And, whenever you come to these areas that have been tested before, the market doesn't give up these territories easily without a fight. I believe those were my words yesterday. And so you can see earlier today, we sold off. By the end of today, we had a pretty good rally. And, now, I would say look at the price action. So you can't really look at all reversals in a vacuum. First off, we won't know where this bar closes until the close of the session on Friday. This is a weekly bar. And so this is the high low, and we don't know where the close will be on Friday. It could close all the way back down here again. So to me, the close of whatever time frame you're looking at is very, very important. But this is where a lot of people get trapped. The market gets into these zones, and you can have this huge short covering rally. You can bounce off here. But, if you don't understand the patterns, you're not going to understand why it's coming back this way. So I think we got, we're in this relief zone. We've come down very quickly, very hard. So, to me, the market, if you think something's going down, you can't enter a trade to go short here after the trade's gone all the way down here. To me, the market's, I think of the market in forms of energy. You need to kind of pull back the elastic band in order for the energy to build so it can go again. So you can see in this little area here, went down, pulled back the elastic band so you could go again. So now, I can appreciate that we'll go back up here to then do that. And that's what the market is. It's just, you can see it's this seesaw of energy, kind of this cadence of energy. And this is what markets do. They don't go straight up or straight down. And, the US stock markets have been exceedingly difficult, even if you understand the position, the volatility, and what have you. And so to me, the major trends still say this is a bear pattern. This is a bear pattern. And so we can run, but we can't hide. And I do think this will go lower, but we could have a substantial rally off of here before we do that. So there's a whole cadence to everything. And you certainly don't want to get caught out. You don't want to get short here and then go for one of those rides because it's excruciating. So it's very important to understand what you're looking at, where you're getting in, why you're getting in there. And that's why I really like the weekly charts, the monthly charts, the longer time frames, because they give me more of a global bird's eye view. And then once I feel like I have, a view of what's happening, then I can drill down into smaller time frames to optimize my trade. But the first thing is to understand, what is this market telling you? And so I always try and identify the phase, the condition, the patterns, and what have you. So we've been looking at the double top, the ascending, broadening triangle, and then this broadening megaphone top. So you have all of these very, very bearish price patterns, which to me still signal that, you may get a relief rally and it may look like it's safe to go back in the water. And then it's, how you doing? So you got to be careful. You got to understand what you're looking at. And the patterns for me tell me what to do. It's very clear. Either you're in a trend or, a pattern tells you the trend is going to change. And then I just look for certain price action to understand where and how to join that trend. key reversals inside bars, but you can't look at all reversals in a vacuum. Sometimes you see these reversals and, this is not going to lead to a sustainable rally. This could lead to a nice rally, a big rally, a tradable rally, but you have to understand what you're looking at. Now, it's entirely possible we could look back and see this as a, giant double bottom, and maybe the market has bottomed. I mean, you can never rule these things out. I try and surrender to the will of the market. But notwithstanding, whenever I see these bad boys, if I'm short and I see a key reversal, I don't, this really isn't a key reversal per se. We didn't make a new low. But again, this is the daily chart of the S&P. And you can see up close that, we're just treading water around these June lows. And whenever the market kind of retests a major level where it bounced off of, it usually has some kind of price action or lift off of that. Now, we could just go nowhere. We could just continue to just hover. But I think that it's probably going to take a couple of weeks before we get going again. So in the meantime, there's, all kinds of opportunities. So once you realize that, well, maybe there's a support zone here, then I kind of get out my, visor, my glasses, and try and find the things I want to buy. But, it's independent of what the S&P is going to do. I started looking at these Chinese stocks today. I started out with PDD. This is a stock that's been on my radar for a long time. And these markets can take a lot longer to get going. They may show you a pattern, but then, there's all kinds of distraction. I always say the market's like a magician. The market, a magician doesn't just run up on stage and pull a rabbit out of the hat. He's always got some razzle dazzle, some distraction with one hand while he's pulling out the rabbit with the other. So this is the chart of PDD, Pinduoduo. This is a Chinese stock. There has been all kinds of risk associated with these things, but I try and just look at each instrument as a vacuum. Try and look at it, very objectively. I don't care if this is a Chinese stock. I don't care if it's corn. I don't care if it's the euro yen. I'm going to look at this thing and see if there's an opportunity that I can make some money. I'm agnostic as to what this represents and who owns it and what have you. I just simply want to take a ride. And so, this is, market that has been coming down for a long time. But as with all good things, trends do come to an end. And when they come to an end, they put on a pattern. So in this case, it looked like a double bottom, the letter W. So when you see a bottom or a pattern that, has the word, bottom in it, over time it's going to do what? If a market's bottomed, it's going to go higher. Now, easier said than done, because, we've just been going lower in this time frame, and these are weekly bars. So, this is, 1, 2, 3, 4, 5, 6, 7 weeks straight down in something you think's bottom. Then it has a lift, and then it's 5 weeks the other way. But this is what the markets do. They're like a magician. They do not reveal their intentions to the average person, right? So if you know what's going on here and you're patient and you're sitting and waiting, then you're waiting for a signal to get you back in the direction that this is indicating. And to me, I think you're starting to see those signals. Now, again, we won't know where this weekly bar closes until, the close on Friday. But based on what I'm seeing on the weekly and the daily, I started taking a poke, and a pretty big poke at the long side of these Chinese stocks. So this is what I'm seeing on the weekly. Not only do you have the double bottom, but you also have this, I don't know why my computer's buffering, so it's creating this inverted head and shoulders. So there's all kinds of patterns that trace out in the markets, one of which is called a head and shoulders. So this is a reversal price pattern. This looks like a man or woman's left shoulder, head, right shoulder. And that's a reversal price pattern. It's a reversal of a trend going higher. When we see this pattern, it indicates that the trend is going to go the other way. Now, the opposite of a head and shoulders is called a inverted head and shoulders. Here's the left shoulder, you have a lower head, and then the right shoulder. And so you have the opposite, where leading into this pattern, you have a downtrending market. And then if this is a reversal price pattern, you're going to have that. So here is what appears to be an inverted head and shoulders. Now, typically we look for confirmation of these patterns when these patterns go through what's called the neckline, which is simply a line that's drawn through the pattern. And so when that peak pierces this neckline, you know that it's good to go. And similarly here, you cross all of these highs, and then once this penetrates this neckline, it's good to go. So we haven't quite gotten there yet. This neckline is around, I'd say, the 71, 72 area. But, you know, I like to have some vision and creativity and get ahead of it and get in early. To me, you know, if you get in early, your risk is very small. I might be wrong, but my risk is going to be very, very small. You know, once this thing starts getting going, you have a, you know, entirely different risk reward calculation. So, you know, you can get a horse, you know, before it's kind of breaking out of the gate. That's when, you know, I make all of my money on very explosive moves. So here is the daily. So we've drilled down from the weekly now. We took that big global view, saw that there's an opportunity. So I then start drilling it down to a smaller time frame, but this is still 24 hours. It's not 15 minutes, where I can kind of still understand the big picture. So here you have what's called an Adam and Eve double bottom. You know, sounds fancy, but all it really means is that you have one bottom that is a spike low and a second bottom that is multiple. And whatever you want to call it, it's a double bottom, but it's called an Adam and Eve bottom. And with the word bottom in it, I can expect that things will go higher. So now, once I understand what this market is trying to tell me, I then start looking for, you know, waiting and waiting and waiting. You don't need to jump the gun. The market will tell you when to get in. You can see that, you know, this has been weeks and weeks of just going sideways to lower. And then today, all of a sudden, I saw this. Makes a new low, close on the high. This is what I call my key reversal. The buyers were in control, notwithstanding the fact that we made a multi-week low this morning. By the end of the session, we closed on the low. So now typically I counsel our members to, you know, wait for these signals and then look for the market to confirm what you're looking at. But I cheated a little bit and started buying some options early today. And I'm up about 40% on my options just in a few hours. So I bought I'll get to that in a minute. So basically, I would just put a buy stop outside the high. You can see PDD closed at 63.24 was the high. So you could put a buy stop at 63.25, 63.50, whatever you want. But that's how I'd set up a trade. So you could, you know, buy this thing at 63.50 on a buy stop, and then you could put your, you know, stop loss at some point. Probably the safest thing is underneath that low, which was, what was the low today? About 59. So now you say, I'm going to risk $4. And you could, you know, be in a position to make a whole lot. $4 could make you 40. 10-to-1 risk reward. That's how you make money in the market. This is what I look for in the market. Does it come every day? No. Does it come every week? No. Do I need it to? No. All I have to do is catch a couple of these a year and I make serious bank. And I will keep on, you know, now I get on the position and then I'll probably keep adding into it tomorrow. So what I do is now I wait for confirmation. I kind of have a sneaking suspicion of what's happening, but I need the market to start telling me that. So, I'm hoping that this market's going to come out of here like a bat out of hell. You've had this little trading range here. And so now I'm looking for confirmation. If tomorrow we go like this, I'll go, well, guess that didn't work out. But, if it goes like that, then, I've got the tiger by the tail, and I'm going to keep adding to my positions very aggressively. I just have a sneaking suspicion that these things could really get going. So in this particular thing, I bought the 65 call options for next week, October 7th. I bought them for about $1.25, and they closed. So this is the October, end of next week, 65 call options, and they closed at $1.80. So I bought them at $1.25, settled at $1.80. So I made what, 50 cents, whatever, 40% of my money, which is meaningless because it opens tomorrow lower. I could lose 50% of what I put in overnight, or I could make 300%. I prefer that. So I bought all of these Chinese stocks. I covered all my bets. They all kind of look like they've got, these buy patterns, these buy price signals, and it feels like such the wrong thing to do. It's got to be right. So Chinese have been in lockdowns, their currency's in trouble, their real estate market's in trouble. And if you look at all of that, then, you'll never do anything. And you'll probably make the wrong mistake. You can't outthink the market. You have to look and see what the market is telling you. And so this is the price patterns, the daily price patterns of Baidu. And you can see we've got a giant classic bottom. And now I love the fact that you came and retested all the way down here. I mean, this is, I should have bought way more than I did. I mean, this is just to me, a phenomenal risk-reward relationship. So this is where, it looks like you're in a downtrend. The whole thing's been a downtrend, but you have to kind of see the patterns, but more to the point, the price action. So I see kind of a pattern, but then it's the price action within the pattern. What do I mean by the price action? You can see that this made a new low, all-time low for several weeks, but by the end of the day, the buyers were in control. And then we came back and consolidated that low, perfect double bottom. And guess what? We closed right on the high of the day. So I don't know what I think I bought some call options in this, the 125s for next week. I forgot what I paid, but hopefully it'll be worth a lot more than what I paid very quickly. You can see we've been in a steep channel here, and it's not going to take much to break out of here. So I just get a feeling that these things are going to come out of this thing like a bat out of hell. And so, like I said, usually you should wait, let the market confirm you, put your buy stop above there, which you can do tomorrow, and take a ride on the wild side if this thing gets going. So it looks so crazy, it looks so bad. There's everything wrong with that trade, and that's why it could be just a huge winner. You get these short covering rallies, and it could be a barn burner. So here is Baidu on this has been in a long-term downtrend. But all good things must come to an end, and when a trend ends, it ends with a pattern. Makes a new low, bounces, makes a new low, bounces. Now this thing still has to kind of confirm itself and go through this neckline, which is around the 150. So, I'm kind of got in very early, but I kind of get the feeling like the early bird catches the worm. And the nice thing is, even if I'm wrong, my risk is so small. If this thing doesn't work immediately, I'm gone. This thing doesn't open tomorrow, and get going, I'll probably just, get going myself. So I always look for the market to confirm what I'm looking at, but I'm looking at the patterns. I'm looking at, the price action. And, the nice thing again is that if you're wrong, your risk is so small. You get in here, you're literally risking $5 or $6 to make $50 or $100. And that's what this thing could be. So, and then the last one was BABA. And I bought the stock of BABA. I bought the options, the call options of the other ones. I bought the stock of this. I was just buying everything I could, anywhere I could. I really didn't think it out. Just slash and burn. And hopefully I'm not going to get burned. Now, BABA doesn't look as good as the other two. But, we're at this huge kind of support area. And again, I think the risk reward is, worth doing. But the nice thing is, if I'm wrong, I'm going to risk a couple of dollars. If this thing, doesn't follow through tomorrow, I'm gone. So this isn't as nice looking as, I like PDD the best, Pinduoduo. It looks like the most mature. It looks like it's formed a pattern, it's reloaded, it's coiled, it's cocked, and it's poised to go. You can see BABA's, trading at or near, its all-time lows, where you can see, relative strength-wise, PDD is way off its low. BABA is still relatively trading down here. Now, I don't know if BABA plays catch-up quicker, or, this goes first. So, I bought both. But this thing looks like it's done the homework. It's done the heavy grinding. It's put in this pattern here. It's put in a triple bottom here. It's kind of, done this little pennant here. It's called a pennant or a flag. And now you've got the key reversal. So you got everything in the pattern trader technical toolbox. And, if I'm wrong, I'm wrong. I'll go and find something else, but I don't think so. So this kind of has everything that I look for. Patterns, price action, you have a flag, and now you have the key reversal. And then, the coup de grace, you just put a buy stop above here and let the market confirm. So basically, put a buy stop, somewhere outside the high here. If you want to be really conservative, you could put it outside this previous high around, call it 65, 66. And, if the market fails, the beauty is, you just got this resting order. And if it fails, you're not put in. And then if it, 3 hours into the market day tomorrow, you're doing something out, you're at work, you don't have to worry. You just be put into an effortless trade. So just look at something here. Yeah, I think Pinduoduo looks kind of the best of them all. So are there any questions about these three stocks? Now, there is an ETF where you can play these Chinese stocks. It's an ETF that combines all of them. So you kind of have a portfolio approach. And it's much less volatile. It's much more conservative. And it's called the K-Web. And I suspect if I look at the K-Web, it's, actually this doesn't look as exciting. So to me, Pinduoduo looks the most exciting. But, look, this is still a downtrend. This actually, we'll see what happens. That actually doesn't look as good as I thought it would. So let's see what happens. You know, like I said, I'm early, and there's a virtue to being early, and there's also a bane. So, you know, ultimately, I just need the market to confirm what I'm looking at. And to my mind, these things should smoke tomorrow. They shouldn't stop. They shouldn't mess around. If I'm right, they should just keep going. And if not, I've got such a small risk. And to me, it's all about risk and reward. Right, wrong, indifferent. It's finding little pockets where you can make a risk reward calculation, where you can see an exchange of a very small amount of risk for a much higher return. So this is what I do that's pretty different than, you know, certainly most FX traders, where if you're trying to, you know, be in and out for 7 pips or 9 pips or 15 pips, this is what we call outcome or expectancy. This is why most people are not winning or consistently profitable, because your outcome simply isn't big enough. If you're trying to make 15 pips in the market, you have to risk whatever, 10, 15 pips. And then you have to pay the spread of 2, 3 pips. So you have to calculate that in there. And so you have really a one-to-one risk reward exchange. And so you have to be 90, whatever, 5% correct on your trades forever. And this is why most people are going to lose, because you're just not going to be able to do that on a sustained basis. Whereas I can lose 5 out of 6 trades and make a fortune. I just have to find that one trade that just goes on a bus ride, where, you know, I risk 5 and maybe I make 35 or 50 or 80 or what have you. And that's how you make money in the markets. This in and out 5, 10 times a day, not going to cut it. So, you know, I kind of just look at everything on a big picture basis. I try and see the global pattern, the global trends, and then try and take a piece out of the middle of moves. See the patterns that lead to these moves and just try and take a piece out of those moves. And you'll notice this is a clean chart or a naked chart. It's naked because there are no indicators. There's no volume here. There's no moving averages. There's no Bollinger Bands. There's just a clean price and time. And from this, I can make risk and reward calculations. Kenny says, confused, you say set and forget. Yes, you closed all your short positions today. So again, there's a lot of nuance to what I say. So I wait for the market to tell me when to get out. If I'm short, then I wait for a key reversal, and then I don't fight these. So if you're short and you see the appearance of this, where it makes a new low, close on the high. Now, not all reversals are created equal, but it's kind of where it happens. Here's another one, and then there's another one. You don't want to be fighting this. Now, there's a chance that it goes up and craps out a little while later, but I'd rather not find out. So I think, you know, for the last couple of days, I said I am a huge bear on the stock market. I have made an enormous amount of money shorting the indexes, shorting individual stocks. But there's a time and place for everything. And I said yesterday and the day before that the 3,600 level on the S&P is a very treacherous level to be short. And like you know, what I was saying to our members this morning, I do a pre-market session called the Boiler Room. And, you know, I had a whole discussion about, you know, the markets are energy, right? They don't just go down and then down and then down and then down and then down. They have energy. So they go down and then they reload. It's like pulling back on that elastic band. They build energy so that they can go down again. Then they build energy and then they go down again. And what you don't want to do, and what most people do, is that, you know, okay, I missed it here, I missed it there, I missed it there. And now you're going, I'm going to miss the whole thing. The end of the world is coming. You get short here, and then it goes, you know, on a 3-week counter trend rally the other way, and you're stuck in there. So, you know, there's a time and place for everything. And the whole thing I always come back to is risk and reward. So, what is the risk reward of getting short right there yesterday? Yes, you look at the news and the world is coming to an end. There's everything to support the end of the world scenario. But you've come literally straight down without a break. So if you get stuck in the hole here, you get short here, where's your stop loss? Where's your risk reward? This thing could come here and mean nothing, but it would blow you out. So you have to kind of, it's a combination. So I'm still very bearish, but you're right at a major low. Whenever you have a low that results in a huge rally off that low, you don't just come through this low and then slice through it like a knife through butter and just keep going. There's always some, give back. Even if this, I said yesterday, even if this makes a new low, I would have been very skeptical because it would probably just trapped you down here and then taken your shorts off. So, the markets are about patterns, they're about trends, they're about levels, and you have to wait for your opportunity. If you're just chasing this intraday 5-minute, thing, that's where you're going to lose your money. So this is still going down, but, I'm going to wait for the opportunity. Maybe this thing retraces all the way back to here to 3,900, shows me a key reversal. And now I understand what my risk reward is. If I get short here and I put my stop loss there, now I can get positioned. You pull back on the elastic band. The markets will reveal to me where to join the trade, where to, put my risk. Right now, you don't know. This is just a random area. So if you're in between, completely between support and resistance, and it could go anywhere in between and probably will for several weeks. And it'll play out the scenario before dumping again. So, obviously there's a lot of nuance here, but you got to be, you can't just go short when all the energy's been depleted. You want to pull back so it can go again. Kenny, you are welcome. John says, respect the level. So I'm not really all about support and resistance. I don't necessarily trade that, but I am aware of it. I am aware where, all of the support is, where the resistance is. You have to pay attention. Primarily I'm looking at the big picture. So the big picture tells me this is a very bearish price pattern, that we're still going to go lower. But the market, does everything in a cadence. It was very bearish, pulls back on the elastic band, goes. Pulls back, makes a new low. So, if you look at a price chart of the Great Depression, you'll see, I don't know what there was, like 15 different times where you had a 15% rally on your way to being down 80%. So just because we're in a death spiral, and we are at the end of the world, it doesn't mean that it all goes in a straight line. There's a cadence to it. There's a rhythm to it. And if you mess that up, you can really get taken to the cleaners. Dusty said, would it be a bad strategy to scale into short trades? So, you could do that. You can always do everything. I mean, I look at this reversal here, and I think it's very unlikely you're going to take out that reversal high. So you're at 3,700 now, and you're 3,900 there. So, as this thing starts moving into here, I would, but to me, the market always kind of gives you, well, I shouldn't say that. It gives you a heads up, but then it's kind of too late. You can see that this made a key reversal, but this was just a huge move. And by the time you get in here, yes, you could get a piece of it. So yeah, you could, and I would. So I would just kind of look at this kind of channel here. And if you get anywhere near this 3,800 price level, I would start scaling in there. And then if you get a sign, that's when you load up. back up the money truck and get going again. So, I think that, this still has more time that it needs to mess around here. And it could just stay very confined. It may not move much higher at all, or it may move somewhat higher. But I do use rallies to start. So I kind of buy put options into rallies. So it's very, if you're kind of, the market's plummeting and you buy a put option and then it rallies, you'll lose a lot of money very quickly. So what I try and do, and again, it takes some vision and creativity and really understanding what you're looking at, is as this is rallying here, I'm buying out of the money put options in anticipation that it's going to turn. But the best thing is to buy that put option while the market's rallying, because the premium is declining. You get a cheaper price, and then when it turns in your favor, you make a boatload. And I made 7 figures right here. I bought these, I don't know, these put options for $1.50. I got out at 14. That's what I look for in the market, these kind of moves. So, they don't come every day. They take a while. It takes a while for the market to build. We may have 2 weeks now where we got to just build like this. And then this went like 8 days, just couldn't make a new high. So it takes a lot of patience. You watch and watch and watch, and it's like pushing on a string, just can't get any energy going. And then when I started, saw it fail right here, this little inside bar. So this is what I'm saying to you. Right there is a little inside day bar. All you had to do was put a sell stop into the next day, and you caught this monster move lower. So this is what I'm looking for now. I'm hoping that we kind of get going here. We build some more energy, and I'll load up my guns again. So we get going, start petering out here. And then, up in here, I will start, amassing big put positions again. So it's patience. You kind of have to wait. So, in between the next, 3, 4 days, 10 days, it may be a grind. There may be nothing to do. Sometimes, sitting on your hands is the best trade. But, I bought these Chinese options. So let's see what happens. I also bought Snowflake. I bought the stock of Snowflake. So like I said, sometimes I just look at where something closes. Snowflake, SNOW. I might be right. I might be wrong. This is, then again, this is a bit of nuance where it looks like it's formed a double top, and you go, well, isn't that a double top? And this is where the market fakes you out a little bit. So so this is Snowflake. And this is where it becomes a little ambiguous. Is this a downtrend? Is this an uptrend? Is this a real bottom? Because right now it suggests it is, that we made a bottom here, and we've been going higher off that bottom. So all during this chaos, this stock has slowly been making higher lows. So you can see we've been coiling. So I look at, again, the market is energy. And for 4 days, we've been coiling on this trend line. So now you'll say, well, isn't this, a double top? Well, it is. But this is where the market throws you different looks. And you got to say, well, is this the real pattern, or is this the real pattern? And I guess we'll know pretty soon. I took a bet. I bought it on the close. What I usually say is, confirm it. Put a buy stop above today's high. Let the market tell you, because tomorrow I could have bought it and it could just open straight down. So I kind of jumped the gun, but I figured this is like an energy coil, and by tomorrow this thing could open up $6 or $8. And so I just bought this on the close. But here again, right or wrong, that's my risk. So I try and dial in trades where I can find a very small risk for a much bigger outcome. And I can be wrong a whole lot, and all I need to do is catch one of these rockets. And that's my whole philosophy of trading, is that I just probe around, try and find my footing, let the market tell me if I'm on the right side, and then I build a position. Because if this thing gets going, I'm going to add to my position and catch a lightning in a bottle. Terrence says, do you ever look at inverse ETFs? I look at everything. And I look at them just because I like to get a different look. I kind of like, it's like looking at something upside down. Sometimes, the demons come in and you question what you're looking at. So to me, this kind of gives me a different way of looking at it. Although you have to understand that these are, so this is the SPXU. This is a triple S&P ETF inverse. So that means if the S&P goes down 1%, this thing will go up 3%. And it's a funky looking chart. So typically you can't really gauge what's going on. I mean, all charts are the same. There was a nice little head and shoulders here that told you this thing had bottomed, and so it did. And then, I told my wife to start buying these things into a pullback. She's more of a buy and hold type thing. So I said, every time this thing starts pulling back, and she just bought a boatload of this and this. And then I told her to get out yesterday, because there's a level here, and then there's a resistance level here. So, this might have to just recoil to calibrate itself. But I look at everything, I trade everything. This is a nice way to play the market. We've got a small amount of risk. You can, put 20 bucks into something. It's a $20 ETF, and you don't have to risk a lot, and you can get a lot of bang for your buck. But the thing about these ETFs is that they rebalance, and so they're really 3-day mechanisms. You get in, you make your money after 3 days, get out, wait for it to rebalance, and then, But to me, I make, my decisions on, whether to buy or sell these ETFs. Well, not sell, but buy, based on what I'm looking at in the primary derivatives, the S&P. So I look at what's going on in the S&P. If I think the S&P is going down and I want, 3-time bang for my buck, I'll just buy this. So every time I think there's going to be a big move in the S&P on the downside, then you want to buy this on the upside. It's an inverse ETF. So if the S&P is going down, this is going to go up, and it's going to go up 3 times as much. So if the S&P is down 1%, this will be up 3% for the day. So Chris, I don't know what put options you bought on what, so I don't know. Frank says, what is the target on Baidu? Higher? And if it really plays out a lot higher. So, if we put in a bottom, then, it could take 6 months or a year and a half to, see the top. Now, I'm not going to trade that out. There are going to be certain levels, where I'll get out again and reload, So this thing looks like it's just starting. So if I'm right, I mean, this thing should try and make itself way back to 150 pretty quickly. So, what I do is I get in, and then I see how does the market respond to what I'm looking at. And that's the whole thing, is that basically this is all I do, is I put my boundaries and structures around price and make certain assumptions. I say, okay, this presumably looks like a bottom, but it's not going to be a bottom until it proves itself. Here's another thing where we have another smaller bottom. So now in my mind, if this really is, an area where there's an accumulation and bottom, we should see the market start verifying, what I'm looking at. Now, I will say, and again, there's so much nuance to trading. I've been doing this for so long that when you come straight down like this, very unlikely you're going to go straight up. There's going to be, I'm going to look for a very quick thrust out of here, and then very likely you're going to get a pullback, and then a reload, and you need to kind of build some space away from this so that you can go. But I'm hoping that I got in at an area where I could get a very quick thrust and, make some, very explosive money, very quickly, and then wait for the pullback and go again. But if this is going to work, it should really work. And if it's not, I'll know that very quickly. That's the great thing. The markets tell you where you stand. And, if this thing goes up tomorrow and then dumps and fails and looks like this, well, then I go, that didn't work out. So, sometimes it's just the probing. Sometimes, you have a better feeling than others. And so when I look at Baidu now, I keep looking at it. I much prefer, if you're going to do something, PDD looks better than everything. Now, it could be that these play catch up, Baba and Baidu, but I took a bet on everything. So this looks like the best of them all. This thing looks like, on a relative basis, this thing's already kind of got higher highs, higher lows, and this is the horse I would bet on. You're in this channel here, and I don't know. So, but again, I just fool around with certain areas where I get in here, in my mind, that's my risk. So, I'm willing to, risk this for that, every day of the week and Sunday. So we'll see what happens. GS, could you please tell me what to do with Biogen? So again, this is really the pitfalls of being short. I have a disclaimer on my my emails, which talks about that very thing. So for those of you who don't understand short selling, it's a little bit different than going short a currency. And sorry, I'm kind of looking for this outgoing email I did. But there is a disclaimer on my website where basically with going short, you theoretically expose yourself to unlimited risk. Because if you buy something, it can only go to zero. But if you short something, it could theoretically go to infinity. And this is what happened with Biogen. I've been talking about this stock for quite a while in the boiler room, and it had all of the patterns and recognition of a short trade. But so you could say that, first off, just so you know, our objective at the Pattern Trade is to educate on price patterns, price patterns, and price action. If you ever elect to take one of our trades, you do so at your own risk and discretion. You got to be big boys, big girls. It is important to understand. Where is this? It is important to understand when you sell short a stock, you theoretically exposed to unlimited risk. So this is what happened to GameStop. You had a lot of hedge funds. These are the most sophisticated guys on the planet. Looking at this company, determining that it was a bankrupt company, and they were short the stock at $5. And this is what happened. So when you're short, you have unlimited upside down, because now this thing went to $500. Can you imagine? You're short a stock and now it goes the other way, $500. So your maximum upside on this stock was $5, and now you're upside down $500. And there were a bunch of very sophisticated hedge funds, Melvin Capital among them all, $1.6 billion hedge fund that went out of business, broke, bankrupt, because they were short. So, you know, this is a very difficult thing. To me, there's a lot of money being made on the downside. I short indexes, I short stocks, but, you know, this is a game that is very, very, can be crippling. I mean, this could bankrupt you. And you can't get out. You can't control yourself. You can't control your risk. The market just goes up here. And this happened last night, where I've been analyzing this stock and the patterns look very bearish. But I've also been telling our members that, you know, when I look at a pattern, then just like I'm looking at Baidu and Baba, then I have a set of expectations. And if those expectations don't work out, then I get out. There's always red flag warnings. And this is what happened in the stock of Biogen, where my expectation was that the patterns were very, very bearish. But then the price never confirmed it. Meaning that if I see something, then, you know, the market should then confirm it. So you can see that. Now, I still think this is a great short, but, you know, this just sheds that, you know, timing is everything. There was another stock, Beyond Meat, just like this, where I made a lot of money anticipating a short covering trade like this. So this is Biogen, and for 10 years, goes back to 2013. This has flashed all kinds of bearish warnings. This is a bear price pattern. And then finally it cracked this neckline. So I started, you know, exploring, you know, the short side once this thing started breaking here. But then, you know, like I said, I look at the patterns and then I see, how does the market trade relative to the pattern? So, you know, when I look at something like this, this is what my expectations are. If, you know, I start seeing something on the other side, all kinds of warning signs go off. And this is what I was saying to, you know, our members in the boiler room. I said, this is setting up for a short covering rally. And, you know, I thought it was going to come here, but it failed. And then I just left it. You know, if something doesn't look right, if you smell a rat, then better stay away. And especially going short, because now, you know, you got short here and it opened there. It's not like you could put a stop loss here and you could get out. And so this is the risks of trading. And so, you know, I put short trades all the time, and it makes me, you know, think that I don't know if I should do it. The problem is, you know, for the last 8 months, everything's been coming lower and we've made a lot of money on the short side. But all you need is one of these on the wrong side and you could be seriously taken out. So you kind of, again, really need to understand what the markets are telling you. So I look at, you know, a pattern, and then I look at what the market's doing, and then I see that. So there was a trade where I made the most money I made last year by doing exactly that. There was a stock, Moderna, that I had been very, very bearish on. Beyond Meat, right here. I'm sorry, not Beyond Meat. So right here, this looks very much like Biogen, where you had these huge bearish price patterns. When this stock was at $200, I was telling our members this is going to be a $30 stock. I was wrong. The stock's now at about $14. So it went from 200 and it's now trading at 14. But in between, it put on a massive short covering rally, just like Biogen. But this is where I recognized it. I said, okay, here's the pattern. And right there where it broke the neckline, I said, okay, this thing's ready to go down. And when it didn't go down, it was all kinds of red flashing signs were going off. And, you know, there's one thing is you just stand aside. I decided to actually buy that. As bearish as I was, I kind of figured, okay. So I said for the past several months, even from the $100, $200 level, you've heard me predict Beyond Meat would crash below 113. I said, well, that eventuality came to pass. However, following the crash through the neckline, Beyond has taken a U-turn and it appears to have formed a rounding bottom. Additionally, crashing below, then rallying above the neckline suggests a bear trap has been sprung. If that is the case, prices could rocket higher very quickly. And this is when prices were at 120. And they ended up going to 170 in 3 days. Now, I bought the stock and I bought the options. And I ended up making a boatload. You can see I bought these options at $1.50. I was up, you know, 200% of my options here. And these eventually went to $23. So I made this much money on the stock. I made that much money on the options and a whole bunch more. You can see the options that were $2 in that graphic were trading at $19 there. So it looked exactly like Biogen, where you break the neckline, you put on a pattern that suggests a trap, and that's exactly what we had. But now Beyond Meat is down here. So maybe this is, you know, why, you know, history is so great. You can see how one thing, I think this is still very much a bear price pattern. This is a distribution. And so this is going to be a shorting opportunity, but not yet. But this is how you can get very hurt if you don't understand what you're doing. So Mark says, should we hold it? Will it come down? I think it will. I do. This is a short covering rally. You had some news today on some Alzheimer's. You know, if you look at Beyond Meat, because you know, I was saying to the guys in the boiler room today who were asking about this, I said, I think it's a short, but you need to wait. So Beyond Meat did exactly the same thing, but it took about 6 weeks for the thing to finally turn. So here's Beyond Meat. And, you know, maybe past his prologue, you had the same thing where you kind of got below this neckline, you did this little double bottom, and then you did exactly what Biogen did today. And so you can see it took 1, 2, 3, 4, 5, 6, about 7 weeks to start turning around. So I'm going to probably short this stock, but like I said, you probably got, 3, 4, 5, 6 weeks to watch the price action. When something goes straight up, it doesn't go straight down. It needs to build away. It needs to build space. This could look like this tomorrow. So we'll just have to see. But I do think it is a shortable, but not yet. You need to kind of just see where the levels are. The market will tell you. You can see right here, the market told you exactly. It made a new high and closed on the low. So the market actually points when it wants to go. So if you understand what the market is telling you, that this is a distribution, you had a head and shoulders here. This is just a BS rally, like I think this Biogen is, but we don't know yet when it's time to go. So let the market tell you when it's time to go. You don't have to be a hero and get in front of it. Wait for a week like this and, put your sell stop there, your stop loss there, and go for the ride. So I'm going to end it there. I hope you've got some value out of it. And I would really appreciate if you would let me know your thoughts. This is our review website. And if you're considering doing anything with the pattern trader going forward, you can see what other people have to say. Don't believe me. This is a review website, but I would really appreciate learning from you how you understood this knowledge, or if you didn't, if it resonates with you, if you see that this could help you with your trading, there is a link right here. You just simply click this link and write a review. So you can see there's 300 others that have, and you can go and check out what they have to say. We're building out this new community website that I think is going to be the coolest thing that we've done. So you get my information, then you get to hang out with others that are in here. We're creating a community. We've got trading coaches in there. And every week we're trying to think of new ways to add value. So I'm going to give you education, trade with you live, each week, hand you trade setups at the beginning of the week, send you weekly video breakdowns of 3 markets that are going to move. I'm going to do a live weekly Q&A. So there'll be all kinds of things, and we're constantly fooling around with it. And so would really love to see you guys in there. And I do think that you will, benefit by being part of this robust community that we're building. And this says, thanks, Mark. The information is priceless. Your experience and insight is invaluable. So, and I would really appreciate if you could just click this thing. Oh, I forgot to put it in the chat box here. Or maybe I did. I'm going to see now. And just simply write that review. I think Frank Turpin was on yesterday. You said something. I'd really appreciate you just copy and pasting that. Asa says, thanks. I always learn on your webinars. You're welcome. And he says, how do we join your team? Somebody will reach out to you after the webinar. I really try not to sell anything on these things. This is really information, and it's up to you how you want to go forward. But we'll send you links, and you can also message us at support@thepatterntrader.com. So if you have any questions or would like to sign up or want to know what we're doing, Terrence says, you've trained my mind to look at charts in a whole new way. Perry says, I always learn something new. Antonio says, great 3 days, sessions, great. So Jürgen says, I've not received any questions to answer to my question. I'm not sure what you answered. You're going to get hundreds of questions on these things, and if I missed it, I'm sorry. Trying to go through. Son says, amazing presentation. So thank you, son. Mark says, I want to be like you when you grow up. Well, you really don't. So thanks, John, as always. John Weaver is always on these webinars, so I really appreciate it. Natalia, thank you as always. Duncan said he's the real deal. I've been with him for 4 years. So Duncan is a very loyal member, part of our boiler room, part of our community website, one of our coaches. So, we're building some great spirit, some great energy, great information. Ray says, I just bought the book and I've started to read it. I hope you get something out of it. Thanks for being that support. So Duncan just offered some support to Jürgen to help him answer the questions. Rich is, thanks, Mark. Good heads up, re-shorting stocks. Yeah, it's, buyer beware. There's a lot of money to be made. I make a lot of money, but there's always these outliers. But to me, I like to believe you can't see everything. And, moves like today in Biogen kind of scare you. But there were patterns and price action that were telling you that was going to happen. So this is the price action of Avis. This is just a nonsense car rental company. And you can see this thing went from $100 to $550. So if you're short that, it's not friendly. But that's why you've got to, look at the trends, look at the price action. So all the way leading up to this big bar, this thing was going all the way higher. So if you shorted it, that's what I'm saying. Don't try and be a hero. Wait for the market to tell you where the levels are. The market will actually tell you what's going on. Jason says, I lost a lot on Biogen, but I'm hopefully more big wins than this one big loss. So Jason, I don't know if you're in the stock or the options. If you're in the stock, you may want to start averaging in at some point. And he says, I was late. What was the outcome of the New Zealand dollar Canadian? So I'm still in this New Zealand dollar Canadian. It had a hookup today. It had a key reversal today, made a new low, closed at the high. But, you know, these reversals, you can't just look at them in a vacuum. You have to look at them in context. So I don't think this one reversal is going to turn around this whole pattern. So I'm still short. And I may just use this little, you know, area to add to my trade. So to me, the trend is still down. Sometimes this is what markets do. They break out and then they retrace back to their breakout levels. And then they go again. So, you know, I never like to face one of these. But again, we're only Wednesday. We still got 2 days. This is a weekly chart. And, you know, it looks like it's, you know, trading at the high now, but, you know, by the end of the week, if it's down here, it's going to look very different. But either way, if it's up here, down, to me, it's not enough to change my mind. The patterns and the direction still tell me that this thing is going to go lower. And I might use any further encroachment to the upside to bang it again. So trading is all about sequence. It's a dynamic, fluid place. The markets go, they pull back, they reload. And then if you understand, you know, the implications of that, you can take advantage. So if you understand that this is the governing price pattern, got a double top, head and shoulders, that, you know, this is what happens. You break out of these very formidable areas, these necklines, you get all excited, and then the markets pull back and then force everyone out here. And then this is the real move. So if you understand that this is the real deal, this is the pattern that's directing the traffic in this, then I just look at these counter trend moves as opportunities to get in sync with the major trend. And before it goes, it always gives you a heads up. Right here, this thing made a new high and closed on the low, right there. Then it made a new high, close on the low. Then you had a series of inside bars. So you had 4 or 5 different signals to get in short here. You know, all you had to do is put a sell stop underneath all these lows, and you were from 86 all the way down to 76, 1,000 pips. And that's what I look for in my trading. I look for pullbacks, building of energy, the signal when it's going to release. So it's, you know, it's like a catch and release. That's what the markets are. They're building of energy, and then they're dispersing energy. You know, they go down, they build. They go down, they build. But, you know, if you understand what the real deal is, you know, you can use all of these opportunities rather than sitting and watching a 15-minute chart. And when you're looking at a 15-minute chart, this thing looks like a massive uptrend, and you're hooked into this thing. And then you wonder why, you know, 2 hours later, it's you know, it's the other way. Do I have a webinar tomorrow? No, this was a 3-day webinar. This was the last of 3 days. I hope you've enjoyed it. Kenny said he did a review, so really appreciate it. If you guys could, I know everyone hassles you for a review, but I think I put in some energy. I would really like to know what you think, and you know, let others know also. So I would just appreciate that. Let me just also do that on YouTube. So I don't know what happened here, Dwight. I just canceled out of this YouTube link. It keeps messing. I can't do it. I don't know, Dwight, if you could do it, I would appreciate it. Put that review link in the YouTube. Just it won't let me do this. All right, guys, thanks a ton, and stay safe, whatever you decide to do. Thanks. I hope you got something out of value out of these sessions, and please let me know. Thank you.